The name of this discussion is taking your business to the next level. So that presupposes that we have to be at some level in the first place, doesn't it? Is everybody still awake? Come on, join me. Okay, great. Presuppose that we have to be at some level in the first place. And so that level is what I'm going to talk about first, where we should be. Because I contend that most small businesses don't reach the level of providing their owners with a suitable standard of living. Most small businesses do not reach the level of providing their owners with a suitable standard of living. And if you think about it, even though we went into business for all of the right altruistic purposes, we really want to make sure that this business that we're running provides for us, don't we? We provide for our employees, we provide for our vendors, we provide for everyone else. It has to provide for us. One problem that we have as small businesses, we're so busy getting the business up, getting it going, keeping everybody paid, satisfying the clients, taking care of the vendors, that we tend to put ourselves as owners last. Don't we? We say, first year, I'm not going to do any retirement plan. I'm going to wait till the third year till the cash flow's here, then I'll take care of myself, but I'm going to take care of my employees. Second year, I'm not going to do any executive benefits. I'll wait and do that till the third year when the big contract comes through, and I know it's coming through. I'll do it later on. And if we're fortunate, later on does come, hopefully, to most of us. But for most small businesses, later on never comes, and we find ourselves 5 years, 10 years, 15 years down the road, or even worse, in our golden years, where we haven't done any provisions for our own financial security. That's terrible. But it's the way small business runs, unfortunately. And why is that? I contend because we do not think of our businesses as a source of potential wealth for ourselves. Now, is there anyone here who thinks of their business as a source of potential wealth? Anyone? Okay, one, two, you ought to. Okay, so we have a small group who have that thought process. What I'd like to have everyone at least begin to view your business from this perspective at the end of this next hour. I really want you to think about it. So I don't want you to hear me. Hearing is just the sound passing through your ears. I want you to listen. Listening takes some action. Listening takes some purpose. Listening takes some understanding. And so where did this come from? Don Maraney didn't invent this. CEO Cessions, which is the name of the course, is a group of educational topics that we have for our clients, and those topics came out of our managers and myself continuing to expand our knowledge about what we are. When we first started out, we were tax accountants. Came out of Internal Revenue Service. We were trained to be good accountants, and we were trained to be good auditors. We were trained to tear a business apart, and we knew what we were doing. But we weren't business people. I shared with Walter earlier, we spent 2 years putting our development plan before we started business. We went to SCORE for 2 years. We went everywhere we could possibly go to learn how to do business. And when we finally started our business, we thought we knew. But we didn't. We did not know how to run a business. And so we had to learn. And as we learned, we shared that information with our clients. As we became smarter, we wanted them to become smarter. We implemented things inside of our relationships with them, but we also thought it was very important that if we learned a body of knowledge, that we shared it with the people who relied on us to help them to move forward. And so we were learning so we could help ourselves move forward as a business. We structured CEO sessions so as we learned new things, we could do that. CEO sessions had sessions on leadership, negotiation, financial management, cash management. This particular session, next level, came out of our relationship with an organization called the Institute of Management Accountants. We joined that organization maybe about 10 years ago because we learned that our clients were now making money, they were living well, but their businesses didn't have any value. And as we began to talk about transitioning and succession planning, it became quite apparent that you can't transition, you can't sell, you can't merge, you can't move unless your business has some value to a third party who's outside of your business. And the question became, how do we help our clients do that? How do we help ourselves do that was the first question. And so it became quite apparent that we had to interact at the level where that is a normal course of business. And it's a normal course of business in large enterprises. Large enterprises operate so that there's wealth. Stockholder wealth, share wealth, equity wealth, they operate so that there's wealth. But how do they do that? Understand this. The differences between large businesses and small businesses are very, very distinct. Large businesses have a separation between the people who run the business, management every day. They have the separation between the people who make the policies, the board of directors, and they have a separation between the people who own it, the stockholders. And each one of these entities has their own perspective on how to achieve profitability, and each one of these structures and entities and echelons has their own perspective on how to build wealth. And even when those things are in conflict with each other, these three separate entities maintain their focus. The stockholders, always value to the stock. Nothing else changes. Management, profitability, cash flow. If we can do that and add value to the stock, fine, but we've got to keep the company going. Board of directors, policy, conscience, community, all of those things. The three then come together sometimes, but mostly they're looking out for their individual responsibilities. But our level, how many folks in here have a management team, a board of directors, and a board of stockholders? Nobody? No. Wow. Oh, one person. One person. I love this. Can I have your name?
Dallas.
Hey, Dallas. How old is your business? 15 years. Okay. And you had this structure for how long? Okay. That's good. That's where we're trying to get today. That mindset. We have to begin to look at our small businesses from the perspective of a large business so that we can become a large business. And when I say large businesses, I'm specifically talking about the wealth and value that we build into this business entity that we work for every day, that we sweat for every day, that we think about every day, that is our entire lives. We need to begin to think about this entity very, very differently. Can we have that supposition, everyone going forward? Great. So the first thing that I want to talk about in terms of that view is this business that I have has to allow me and my family to live well. Yes? Yeah. Why would you be in business and not be able to get your livelihood from this thing that you're sweating over every single day? True? Right. In the world of financial executives, everything has an acronym, everything is technical, so I try and bring it down so we can speak English. And so basically what I'm talking about is personal financial security. And if you look on the page, I've broken it down so that we can talk about it in levels. I want my business to be able to provide myself and my family, not even talking about my employees. The assumption is that my business is paying my employees, that we're paying the rent, that we're doing all those things that are obligations of my business. That's fine. And that's what we should be doing. But now I'm trying to take each one of us and move us from being the last one paid to being among the first ones paid and being paid well. That's going to require us to do some things we'll talk about before this hour is over, but still I'm trying to make sure that our mindset and our context are on the same page. And so what do I want first thing from a business? I want that business to be able to give me enough money so that I can have the standard of living that I and my family expect. Is that fair? Right? I may be the last one paid, but at least I want to be paid enough so that when my bills come in, my family looks at me, I can take care of those responsibilities, whatever they happen to be. Okay? Now, how I take care of those responsibilities, that's a discussion for another personal finance class, but let's all agree, if we will, that that should be the minimum that my business provides for me. Is there anyone who thinks that that is unreasonable? Great. Now, I'm going to say this. That first level, my business providing me with a living wage, is a challenge for most small businesses. And Walter, please feel free to jump in here. I would say that most small businesses, I'm not even talking about failure. I'm talking about a business that's going. The person has to have a part-time job. They're just a little bit above hobbies. They are working really, really hard. They're trying to make things go. And most businesses do not provide that level of personal financial support to their owners. Again, not failing, but not providing the level of security. Please, Walter, jump in.
A lot of them feel like it's, that they're not worthy of making a profit or getting a sufficient income because they're focusing so much on creating this successful business. They expect that down the road they'll make some money.
Exactly.
And unfortunately, down the road can be pretty bumpy.
And most times down the road doesn't come because we have to plan for down the road. And we'll get to planning later on. But right now I'm still working on suppositions. Yes, can I have a name when you talk? What's your name?
Judy.
Hi, Judy. Judea? Judy. Hi, Judy.
I have a question. It's typical in the startup world that you don't expect to get that income right away for the business owner. What is the typical time when you should look at what you're doing and say, well, I've been doing this for 2 years and I am not able still, like you said, to pay my bills with it. What is the typical time for that to happen? Because I do think that you still have to invest some time at the beginning, right?
Oh, sure. You have to invest some time. And I would say at 2 years, if you're still not doing that, then we have a problem. And that problem is that you haven't done a business plan. You haven't projected out your entire performance. And if you have done a business plan, you haven't been monitoring it. And we'll get to that. So is there a point where you should be realizing a living wage? I would say yes. Whether it's 1 year, 18 months, or 2 years, it would depend on the industry, you, and a bunch of other factors. But still, there should be a line of demarcation, and it should be in your business plan where you can tell I'm here or I'm not here, and this is what I should be realizing at this point in time. And we'll talk about business plans and hopefully with Walter and everyone else will interject at some point in time after that. So basic, living wage, absolutely. Now, once you get to that point where the business is providing you a living wage, what else should you expect that your business should provide you? You can cheat, look on the paper. It's really okay, The next thing the business should provide you is with the ability to be financially secure. Now, what's the difference between living wage and financially secure? You'll find lots of definitions, but in this discussion, the difference between a living wage and financially secure is the living wage provides you to live at the standard that you want. Financial security allows you to then start taking money and saving it, accumulating it, and building a capital reserve for yourself. Whether that capital reserve is to go on a vacation or whether that capital reserve to buy a new house, it doesn't really matter. But I contend that you're financially secure when you're able to go beyond your need for living obligations. Now, I believe that both living wage and financial security are the same thing, except living wage is short term. Financial security is a longer term concept, but both of them are extremely important. And the reason that I broke them down into two things is because when you're in business, you can't stop at the top. You have to move incrementally. And I want you to agree that when we leave here today, that we'll go back and look at our businesses and determine whether or not these incremental steps have been met. And if they have not, how we can meet them. And if they have been met, where we are along that curve. Okay? Good. Last but not least, financial independence. Financial independence is when you don't have to worry about where the income is going to be generated. Financial independence, in my mind, is when you really don't have to work for income. Your money is working for you. And so let's look at it this way. When you give your employee a paycheck, aren't you really giving them some form of assistance? Really? Think about it. Aren't you really giving your employees some form of assistance? If that paycheck stopped, we and our employees would be in real trouble, wouldn't we? That's our source of income. We have to have that source of income. We have to work to generate income. We as business owners, that's what we're doing. We're generating revenue for our company so it can generate income for ourselves, for other people, for vendors. That's essentially what we're doing. So this economic asset, which we're growing and developing, essentially takes our products and services and turns them into cash. Isn't that essentially what it is? And what I'm saying is part of that cash has to go to making sure that I, as the business owner, you, as the business owners, are taken care of. And the ultimate taking care of in this example is financial independence. And the 2 steps before that are, anyone? Okay. How about now? No, didn't change, huh? Okay. No, you can't answer, Walter. You already know the answer to this. The first step is living wage. Okay? The second step, financial security. What's your name, my friend? Mark? I like Mark. Mark, move right over here. Okay. And the ultimate step in that first stage is financial independence. And I contend that this is the level that we need to be at now, first, before we can think about going to the next level. So before we explore this a little bit more, let me ask, does everyone kind of agree with the premise that we have in this discussion about the first level and the next level? Yes? Buy-in? Okay, good. So let me just say, yes.
I don't know that I disagree with that, but I just think that maybe that could be a generic discussion. When we take the entrepreneur versus the small business owner, which there's somewhat of a difference. Some people go into business to provide a service and eventually one day want to become financially independent. Others have an idea that will take them to financial independence that will require you sacrificing if you can see that being put into place and it takes a certain amount of time, especially if you're talking about product development, getting it into the market and knowing what you have and knowing what's going to happen if you get it to that various level, and that is going to require not being stable or secure for a year or two, but you know that it will almost guarantee financial independence in a very short period of time versus the longevity that comes along with starting a small business in an area like this, in an economy like this, and being realistic about it.
Right. But I think we agree that whether it's sacrifice for short term or sacrifice for long term, that either an entrepreneur or business owner or an inventor seeks to have from that product or that service realize the wealth that they need to further their lives at some point in time. Would you agree with that?
Yes.
Yeah, right. So sacrifice is a word that we used. I think going into business is a sacrifice in the first place. But it's a sacrifice for reward at the end. And that reward, I still contend, is that we realize financial independence. So would you concur with that? No, please, if you don't, this is a discussion. This is not mandated. This is simply a discussion. So would you concur with that or not? Okay, she's wonderful. Thank you. Go ahead.
I don't like the word sacrifice because I do feel that if you choose this path,
Mhm.
you better know it, or you might as well just look for a job, right? So I think I look at it more from the point of view of postponing your gratification. Because, like you said, yes, I think that you're very excited about your business, about your service, and you want to provide something great to society at large.
Well, a lot of us have suffered and are suffering. And that's why we're trying to change the mindset so that we end that as soon as possible. Regardless of whether it's sacrifice or delayed gratification, when we go into business, we know there's going to be a period of time that we're not going to be able to do the things that we want to do, that we used to do, or that we want to do in the future. There's got to be a period of time where we are going to be able to devote ourselves to building this enterprise. Sacrifice, delayed gratification, it's all the same. What I want to make sure that we understand is that at the end of that period, whatever we call it, that we come out on the other side with something that's very, very important to each one of us. The ability to live as we feel we should, and then the ability to begin to build security and wealth as we absolutely have to, for ourselves, for our families, for our legacy. It's all about economics. It really, really is. It doesn't really matter if I build a business, I end the business 30 years later, I haven't done anything with it. My children are no more wealthy than I was when I started the business. My grandchildren aren't any more wealthy than when I started business. All I did was work for 30 years. I worked. I mean, what did I accomplish? Maybe some self-gratification, but that's not enough. That's my contention. That's not enough. I'm not saying that we should gouge the business for our wealth. I'm saying that we should plan so that the business can provide us with the kind of financial security and financial independence that we deserve, while it's also paying the bills, paying the vendors, paying the employees, and everything else. I'm saying that the business should provide us the executive benefits so that we can form our retirement and transfer our risk. I'm saying our business should be able to do all of those things. And we're going to talk in a minute about how we get to that point. But I want to make sure that the discussion that we're having is a discussion where we can have some takeaways. Again, can't change your mindset, but I want you to be able to take away, and when you leave here saying, I need to look and see whether my business is doing this for me. And if it's not, how long will it be before it can be doing this for me? But at the end, if you look down long term and your business doesn't show you that at some point in time it's going to give you financial security or financial independence, then we have to change that model. I'm not saying you have to change the business, we have to change the model. Okay? That's what I'm saying to you. And it all starts with our looking at our businesses, our babies, our whatever we call it, from a different perspective. They now have to become economic assets. An asset produces income. That's essentially what we're doing. Economic, it means it is part of the global economy. Everything that happens affects it. And the way that we monetize an economic asset is to bring more value to it. And I contend that bringing value to this economic asset depends upon our cash flow. And so with that supposition, can we agree that we're on the same track for right now? Good? Okay, good. Now, how do we do that? It starts with planning. One of the big differences between large organizations and small organizations is large organizations have the resources, the connections, and the teams, and the time to do planning, strategic planning, look long-term. They plan long-term for short-term profit. They have the ability to think years out. As small businesses, we're so busy trying to make sure that business stays in place that we either don't have time for planning, don't take the time for planning, or if we do have plans, we don't have time to make sure those plans are being modified and changed and revised as things change, the economy changes, the business cycle goes up and down. And so I think the most important thing that we can do is begin to carve time out of our daily routines or weekly routines to begin to think. If you're not thinking, you're not planning. And if you're not planning, then either you're not growing or your growth is uncontrolled or unplanned. And either one of those is a situation we don't want to be in. And so there are a lot of people who have different opinions about the value of a business plan. I'm a proponent that the business plan is a vital document that should be developed before you go into business, and then used as a monitoring tool once you're in business. That business plan will tell you, if you've done correctly, with help from SCORE and Walter and wonderful guys like that, that at some point in time, this is what I should be doing and this is where I should be, both operationally and financially. And monitoring means you sit down at the business plan and you look and say, I'm here or I'm not here, and determine whether the circumstances that you proposed in that business plan have been met or not met, and you determine whether or not you need to change those circumstances to move forward. And so the question that Judy asked me, am I correct, was when should we expect that our business is going to provide us with a living wage? Well, before you even start the business, that business plan, along from the marketing section and the demographic studies and everything else that you're doing, should give you an idea of when you can expect that to happen. Now, will it happen exactly the way it's in the business plan? Almost never does. But still, you've got a roadmap. You wouldn't start a trip from here to California. I'm borrowing from my wife now, who wrote a book called Magnetizing Unlimited Abundance. You wouldn't start a trip from here to California without Google Maps or on your phone or something else. You wouldn't. Nowadays, we don't even go around the corner without pulling up maps and putting in the number. So why would you take something as important as a business, your livelihood, your skills, your talent, and try and drive that trip without some kind of roadmap? The analogy has got to be the same. You've got to have a roadmap. Now, I have people tell me, well, my business is growing and I don't have a business plan. So why do I need it? And then I ask them one question. But did you sit down and figure out where your customers are going to come from? How you're going to reach those customers? How you're going to be visible with those customers? How you're going to charge for whatever service you're doing? What service or product you're going to be? They say, yeah, that's a business plan. What they haven't done is document it and write it down, which means that they can't go back and judge where they are along that continuum. And to me, that's the next important part, being able to take what you've written and determine whether or not you've realized it. Remember, we're so busy working trying to bring the revenue in, pay the employees, pay the vendors, and hopefully have some profitability after that, that ability to take time out to think just disappears. So the time to do that is before we get that busy, but also we have to discipline ourselves to taking some time out during that operation to do it. One day a week, believe me, I tried them all. Carving out a day, carving out a weekend, carving out evenings, making my wife do everything. But she's running businesses of her own, so you've got the exact same problem. So how you do that and when you do that is going to be difficult. I contend that it will be, but you have to do it. The second part of that is we've been talking about resources all day long, relationships all day long. That's the difference between big businesses and small businesses. Big businesses acquire the resources because they have the money and the connections, but they also acquire the relationships. And the relationships are extremely important. It's not the bank, it's the banker. Your advocate in the bank is that person that you establish a relationship. Doesn't matter what the name on the wall is, because when you get the money, it's still green, it still has dead presidents on it, right?